welcome this morning to Elke Rubach. Thank you for joining us.
Hi, Patrick. Nice to chat as always.
Yeah. Um, the first question I think of when I met you is, what made you make that switch from law to the financial world?
I hit my head. No, just kidding. No, in reality, I love law. I find it fascinating. But there was something after analysis, like self-analysis, there was something missing, and I wanted to have a bigger impact. There was something missing. So I left law, moved into banking, and to cut a very long story short, I ended up in compliance, which sounds terrible, but it was a lot of fun because I was between clients and advisors, making sure that the positioning of any recommendation was compliant. And it usually was, but what I noticed was there was that extra question that was missed. And as advisors, when you're in asset management, you think that your strategy, you're passionate about it, so you think your strategy is going to solve everyone's problems. If you're in insurance, you assume that insurance is going to solve everyone's problems. And reality, until you spend that extra 5 minutes with a client understanding what their issue is, you can only then make recommendations. So 12 years ago, pretty much, a little bit over 12 years ago, I decided to venture on my own, trying to really normalize the money conversation, help people understand that wealth management is not just a rate of return or how to grow your bank account or your RSPs or TFSAs. Normalize the money conversation with the next generation. Understand that if you don't have all the pieces that affect your overall wealth management plan, it's not going to work. So you need to have a clear idea of how much money you need to live and never outlive your savings at whatever lifestyle you want, right? We would run that. Then you also need to know how much money you can actually give away, be it helping your children, being charitable, or whatever that is. And at every step of the way, you need to have awareness of if something happens to you, your financial plan needs to work with or without you. So if you were to pass or you became incompetent or so on, how much are you leaving behind? Is that properly documented in your will? If you have a corporation, do you have a secondary will? Is your overall plan tax efficient, or are you just making CRA rich? And very importantly, is the next generation ready to receive whatever you've created, be it $5 or $5 trillion? If they're not ready, the number of problems that arise is endless. Is loneliness, scared, assuming that there's a lot of money, insufficient funds if there's not a lot of money, or wrong advice, new friends, and panic and sense of insecurity and not knowing where you stand. So really, we work with professionals, what we call high net worth individuals. I always question that one because it's not the income, it's how you spend what makes you a high net worth person.
Absolutely.
But we're not here to change family dynamics. We're not here to convince. I always tell people I'm an advisor. I'm not a convincer. So tell me your problems. Tell me what you're trying to solve for. My job is to go out and figure out what the best solution is for what you're trying to do. If they don't want to do it, at the end of the day, the impact or their decisions to do or not do is on them. So we're not a retail shop, like call us now, and if you call the next 2 hours, you're going to get, 3 insurance policies for $333.99. But we want to make sure that they're looking all around. And we did struggle when we came up with the holistic family advisors concept because holistic sounded a little bit yoga. But it's really comprehensive planning, looking at everything, simplifying the money conversation, simplifying structures that sometimes people have overly complex situations that do nothing for them, and they're just paying professional fees that do not advance the conversation. So it's really like a financial triage, and we use a lot of analogies. So assume that you're going to the emergency room traditionally in wealth management, like invest in this, invest in this, invest in this, or buy this, buy this. No, if I don't know what's hurting you and I'm your financial triage doctor, I might send you to the cardiologist when what you really need is some kind of trauma doctor or nephrologist, right? So I don't want to send you to the wrong doctor until I've spent enough time figuring out what's wrong.
You know,
And sometimes there's nothing wrong.
I've been on calls, probably at least 30 with yourself or Brooke from your office. And that is an underlying message that I'm getting from all your clients already, that you don't just look at those small pieces, it's a whole picture. And I can't even tell you how important that is from my side in dealing with your clients, that they have an understanding it's not just one piece that Elke is working on. I see that throughout your LinkedIn too. It's crazy that it's such a human look at how you're going to help people with their finances. So, and in talking to your clients, I think they now really understand the meaning of flexibility and cash flow. So many advisors I talk to at first, when they come to me to say, you know, can you get my client the best rate, Patrick? And that's never been the case with you. In talking to your clients now, it's about a debt management strategy. Can you explain how that works into your holistic planning?
Well, to me, the most valuable, I mean, rates will go up and down, and neither you or I can control that, right? Clearly, the government is not being able to control it. That's another story. Let's not go there. But as an individual, what you do need is a team of advisors that know what they're talking about, ethical, responsive, and available. Okay. So yes, rates can go up and down, but the level of people or the kind of people that we work with may have access to money during the year that could actually work in their favor, right? And the number of times you've given second opinions, and sometimes the strategy works, sometimes it doesn't work for some people, sometimes it doesn't work psychologically for some people, but generally speaking, everything else being equal, it works. And reducing your mortgage from 25 or 30 years to 9 or 10 or 12 is huge.
Yeah.
So, but that's if people are willing to listen. Now, again, I'm not here to convince people. Numbers don't lie. If they're not willing to do whatever, what it's not just mortgages or investments or insurance and so on. I document everything. I show what everything has been explained. And sometimes people say, not now. Okay, we can revisit. But that's where the importance of a strong relationship with your advisory team comes in. To me, rates go up and down. They've gone up faster than we wanted, but not that when I started seeing what the government was doing. But let's figure out a solid plan that is flexible. So if rates go up, you're ready. If rates go down, you're ready. And also making it work for you and simplifying things, and not just saying, okay, like really understanding where we're going and why we're working together towards their own benefit.
Yeah, I think that's why we hit it off so well when we first met, because it is about team together, and definitely the understanding of cash flow and flexibility in planning for your clients. And you do have a whole different demographics that you work with. I've seen a lot of them. I think the most important thing I can say of all the ones that I've worked with in terms of your clients is they have a better understanding now. And when you can take care of those larger financial planning pieces and know that their day-to-day money management is taken care of at the same time, I think it's a great relationship. Very symbiotic. Thanks, Elke. Take care.
Thank you. Bye.
Bye-bye.